Good morning, afternoon or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another jam-packed daily market update. We've got quite a bit to get into. Yesterday, we survived Nvidia's earnings. Stock futures rally as Nvidia's strong forecast reignites the AI trade. And this is somewhat put to bed a lot of the noise that was out there in regards to the AI bubble popping. I think AI can still go a hell of a long way. I think they can't build AI facilities fast enough to keep up with the demand right now, and they are expanding aggressively. But Nvidia's earnings have somewhat given markets a bit of a sigh of relief, and obviously they came out after the US bell. So once the US markets are closed, but the cryptocurrency markets actually didn't do too badly. Perhaps I'll just show you what yesterday's price action before we come back to the S&P, and I'll tell you why I don't believe we are entering a bear market. And it has everything to do with the macro. You can see this is kind of yesterday's price action. Really on the back end, we sold off. The whole market sold off. Marginally lower lows here, which means a turn could be on the cards. We do need to see that strength come in, though, in my opinion. But this is effectively the sort of price action that you got. And I think you're going to have a green day generally for the stock market. If I dive over to Nvidia's stock before we talk about it more broadly, we're going to be introducing Mike Wilson, who is Morgan Stanley's analyst, who we've been in agreement with in regards to we're entering a new kind of earnings cycle and bull market, having gone through what he looked at as a rolling recession. I'll let him explain that in more detail. So we've survived this. Crypto has enjoyed it. Crypto needs a bit of a hero. It needs to reignite. It needs to see some sort of a bid underneath it. But this is one catalyst that's been avoided, which I think is great. Let's talk now about what I believe is effectively going to save the crypto picture right now. And maybe this is just how I perceive it because I'm, of course, bullish. It feels like the masses or hordes are stacked against me in regards to retail predominantly being bearish right now. And a lot of people believe we're now in a bull market, a bear market. I don't believe that's the case, and I don't think we've got the evidence for that being the case until proven wrong or otherwise. I think, yes, Bitcoin has sold off, altcoins have sold off, and we've had a pretty pathetic year for altcoins. This is supposed to be your alt season year. We're yet to see a Bitcoin dominance cycle take place, and I think that still comes, but more with the macro picture moving forward, which I believe is a positive one. And we're going to explore that a little bit in this one. We're going to be looking at commodities and what they tell us also, and how it kind of aligns with more broadly what Mike Wilson is saying, and the fact that we believe the S&P 500, having gone through a bear market earlier this year, and crypto has had to contend with all of this, bear market technically defined as a 20% plus pullback. The S&P's entirely engulfed that. Every time it's done this, it's gone on to rally for the smallest period being 395 days, which takes into mid next year. I think that's going to provide a good backdrop for crypto to actually do well and not enter a bear market. I don't think crypto just goes into its own bear market whilst the rest of the markets do well. Let's listen to, and the macro story is really what I'm focusing on in regards to looking for where crypto is going. Let's listen to what Mike Wilson has to say. Remember, we listened to him earlier this year, and he's been very right on a new bull taking place and the capitulation event on Liberation Day, kind of signaling the end of downside. Since then, earnings have been fantastic. And I think that's going to continue. And you've got these companies that have had to kind of lean out from sort of March 2020 onwards, deal with a lot of things like higher borrowing costs, so on and so forth, and now brighter days are ahead. And I think they're going to sort of flourish into that. And I think that's going to provide a sort of fundamental backdrop. Let's listen to what Mike Wilson has to say about all of this.
6,500 was our target for this year. That's looking fairly accurate at this point. We'll see how the year closes. It's not going to be a straight line to that 7,800. But the big story, or the big call that we've had, I think is different, is that we do think it's going to broaden out. Inflation will come back next year, which will drive earnings growth across the S&P 500. So it's not one or the other, Martin. It doesn't have to be at the exclusion of the Mag 7 or AI stocks not working. It's more that the AI investment can lead to more earnings across the S&P 500. And this idea that we had what I would call the end of a rolling recession in April. That's a differentiated view that we've had for quite a while, that April marked a low, a trough for that rolling recession, and we're actually now into a new economic cycle, a new earnings cycle, and all we're waiting for now is the Fed to get ahead of the curve. We have 3 penciled in between now and the middle part of next year. That's kind of in line with what the street is kind of pricing right now. There's tension in the market now between the Fed cutting and how fast they're cutting. The market wants more cuts and they want them faster, and the market also wants more liquidity, and the Fed has been kind of slow in providing that. My view is that they're going to catch up to that pretty quickly in the next 2 or 3 months, and that will be when we start to see the broadening out in the equity market.
So Mike Wilson very much putting forward his bull thesis there. That's certainly technically plausible in regards to what the S&P has just done and where it's going. Speaks about the Fed catching up. I think there was a bit of pressure put on markets also yesterday with the probabilities post the minutes, FOMC minutes, actually going in the favour of no rate cut. They are going to cut, and they are going to add to their balance sheet. And we looked at Ray Dalio's take on all this. And really what he had to say, if it stays in financial assets, so when the Fed and all the central banks buy bonds, it creates liquidity and pushes real interest rates down. As you see in the chart below, what happens next depends on where the liquidity goes. If it stays in financial assets, it bids up financial asset prices. Stocks, crypto is going to benefit from that, and lowers real yield, so multiples expand, risk spreads compress, and gold rises. So there is financial asset inflation, which benefits holders of financial assets relative to non-holders. So it widens the wealth gap. And then he talks about sort of inflation. And this effectively being a symptom of the Fed increasing liquidity. And Mike Wilson very much talking about, there's going to be an inflation, and that's what's kind of going to drive earnings moving forwards due to what the Fed is likely going to do and play catch up. I think they will. I think we just need more clarity on all of this and where they're going. They've been very sort of non-forthcoming. And I think one thing that leads me to believe all this is coming and that assets are going to do well is the commodity kind of ETFs or index ETFs. This is Aberdeen's Bloomberg All Commodity Strategy K13. This is phase 1. This is broken out. And there is a correlation between commodities going up in dollar value and the stock market going up in dollar value. And of course, crypto, which should outperform the stock market going up in dollar value. This is Investco's. This is one of the oldest kind of basket ETFs that you have for commodities. These have been suppressed with rate cuts. I think when they sort of lift the lid off, you get that again, and that's going to drive earnings and stocks, I believe. So really what we're looking at is a good macro environment as well as technically plausible routes ahead for crypto that gives us a bullish picture, despite the majority right now being rather bearish due to Bitcoin pulling back in the manner that it is. In our opinion, and we've been very clear on this in my perspective is just a pullback until proven otherwise. Yes, it's brutal. Yes, nobody enjoys these pullbacks. Certainly the altcoin sector that's largely gone sideways for a year. But you've had 5 of these thus far. We've been writing it thus far, and I think this is a pullback. And once this reasserts, once you get that broader market reassertion, for me, what I'm most looking at is charts that are consolidating just below all-time high in price discovery. I think that's going to be very ferocious, to say the least. So we're going to be here every single day, guys. Don't worry, to keep you up to date with the latest and greatest things happening in the cryptocurrency space, but also the markets and what we see. I'm still long and strong. Still holding crypto and still actively accumulating positions in coins that I think are going to do very well. There's a sensational opportunity here with the cryptocurrency space. You get to actually invest or be a part owner of protocols that are going to become a staple or an enabling factor in the world that we're moving towards. In the same way that protocols make up today's world, the protocols that hold the internet together, the telecommunications industry, the protocols that enable computing and all the things that we use on a day-to-day basis. Often these have been monopolized by individual companies. Now these protocols can be directly invested in via cryptocurrencies. And if they play a similar role to the protocols we already have today, their value could, I believe, as Andy Cowell would say, be incomprehensible. And that's an opportunity we're still holding out for, which makes me a kind of happy hodler. A little bit of interesting news. The Economist, crypto got everything it wanted. Now it's sinking. The 8th of November, 2025. Mark this. This could be the bottom. You typically get these headlines to kind of get retail out, and that's what I ultimately think this is about. Also, this is interesting. I had lots of my members in Patreon highlight this to me. Monthly limits on cryptocurrencies from Barclays using the Barclays personal and business debit card. The fact that they are limiting this is worrying. Also for sort of students, young persons and higher education people, they're putting the limit as 0. But they're also putting sort of payouts in and out. And I think the banking sector needs to pay close attention to this industry, because ultimately it challenges a fractionally reserved system. If you had any kind of mass withdrawals, it would put serious stress systemically on banking, which is fractionally reserved. They don't have, this is common knowledge, or should be, if anybody's finding this out for the first time today, continue to dig deeper. But if everyone was to go to the bank today and say, I want my money out, they couldn't physically honor that. In fact, I don't know what the fraction is, but it's very small and continues to get smaller over time. Ladies and gents, that's it from me. I'm going to love and leave you. Hang in there. You know, if you don't want to be in the markets, the crypto markets, and they're kind of getting on top of you, then do what you have to. I still think there's an amazing opportunity here, and I think the broad picture gives us confidence that this is going to recover, and that this is just a pullback in what is a broader macro uptrend. That's it from me, guys. I'm going to love and leave you. Thanks everyone for watching. I'll see you all in the next.